where I saw a lot of revenue and other profitability momentum. And that momentum wasn't coming through in the share price. And what I was seeing was a turnaround that was happening. And that turnaround was starting to drive the profits and the revenue and the earnings. And the market hadn't yet, priced it in. And so that was a recent one that was up like 50% in the 3 months that I held it. I really like finance, but I studied accounting, and I heard it's really hard, to go from, accounting to finance. And I said, who told you that? And she said, oh, I don't know. So, but I just heard it. I said, so you're going to base your life on something that you heard from not even anybody? You can't even tell me who told you it? Nonsense. What you got to do is go out and find your way and figure out your way. It's nothing wrong with talking to other people and following other people for some things, but ultimately the world is, we can do what we want to do. And so that's, to me, success is finding my own way, doing my own thing. I like, independence, and I like to be able to do my own work in my own style, in my own way. And for me, I wake up very early. I start work, at 4 in the morning or so. And, that's my style. It doesn't necessarily work in a corporate environment possible, but, that I would say, to me, that's success. The other thing is, like, what is success? Well, one of the reasons why I moved to Thailand 32 years ago is that I got the same vibe that I got in Philippines, and that is, and other countries around Southeast Asia. And that is, being happy, having friends, having a good family relationship. Like, these things are where true success comes. When my father passed away 8 years ago, I brought my mother to live with me here in Thailand. And I can say that it's been 8 years that we've been together and here in Thailand. And it's taken my relationship with my mother to a whole nother level. And, thank God I was able to do it. And so what is success? The ability to take care of our parents, being, sincere, being trustworthy. I have business partners in both of my businesses that I've worked with, one for 25 years and the other for 35 years. And we've never broken trust. So trust, when I asked my dad this question, Neil, towards the end of his life, I asked him, what is it you're most proud of? And he said, I build a trusting family. Like, get real about what is, important in this life. Money's important. Investing's important. Learn. I value learning. And I've read between 3,000 and 5,000 books. In fact, I nowadays, I basically, have read pretty much almost every major investment book out there. And I've read every major highly ranked business book out there and tried to apply these things into my life. So yeah, read, learn, build trust, have a good relationship with your family, be careful with your money, reduce your risk, those types of things. Keep on learning.
Yeah, it's amazing that you are a voracious learner, where you have not just read hundreds but even thousands of investment books. So the wealth of knowledge that you have, it's just really amazing on how you connect the dots of what you've learned from different books. Maybe I just have a question, because some people who are watching us, aside from learning from videos from YouTube, they are also wanting to learn in books. Of course, aside from your book that they can order and buy and they will learn, from the books that you've read, the thousands of it, do you have like a top 3, top 5 recommendation on where they can start? Or
So basically, the way that I do this is that what I've done in my life is I have looked at every major business and investment book that's out there. I went on Amazon and I scraped the data off of Amazon and Goodreads, and I created a scoring system because I'm an analyst. And I basically identify what are the top books of all time in investing and in the area of investing and the like. In addition to that, I also then basically have read every one of those top books in not only investing, but also in management and other things like that. And then I created cheat sheets and all of that type of stuff for these books. And then eventually what I did is I created courses. So I actually have a whole series of courses on different topics that are based around the book. But let me give you the list of the books, some of the books, the top books that I've measured and looked at and thought these are the best books. Of course, the top one is The Intelligent Investor by Benjamin Graham. But most people can't read it. It's just old and a lot of things don't apply. And so that's why I have a course on it where I simplify it and provide a whole way of understanding it. The second book that I would recommend is A Random Walk Down Wall Street. It covers almost all the topics, including factor investing and all kinds of things. I've also created a course for that. And then the third one, out of 9 books that I highlight, the third one is a One Up on Wall Street by Peter Lynch. So Intelligent Investor, A Random Walk Down Wall Street, and One Up on Wall Street are, to me, when it comes to picking stocks and building portfolios, those are the best. There's also a whole nother group of books that I look at, I call Building Wealth. And those are like The Psychology of Money, The Simple Path to Wealth, The Millionaire Next Door. Those types of books are more generally about building wealth, not about picking stocks. But about picking stocks, it's Intelligent Investor, A Random Walk, and One Up on Wall Street.
All right, guys. So if you are watching, take note of that from the guy who read thousands of books. So take note of that, Intelligent Investor. And if you do not like reading books, good thing Andrew made a course of it. So we can put some links there. And I'm sure people would learn a lot from it in terms of investment. Speaking of investment, again, like because you have a methodology like FVMR, but in terms of seeing a stock, do you see a stock as, oh, this is an undervalued stock? Do you still have that, or always just the FVMR?
So it's like, think of it this way, Neil. Imagine that you're looking for a young man is looking for a girlfriend, or a young woman is looking for a boyfriend. If the only thing that you look at is the looks of the person, you're going to miss some of the most important things, like, are they trustworthy? Are they a good person? Are they happy? Are they fun to be with? All of those types of things you're going to miss. So ultimately, I always look at, all the different factors. And I look at the company from many different angles. And then once I've isolated it down to a small number of companies, then I go into more detail. One of the companies that I had in my portfolio, I've recently exited it, but it was Malaysia Airports. And that was one where I saw a lot of revenue and other profitability momentum. And that momentum wasn't coming through in the share price. And what I was seeing was a turnaround that was happening. And that turnaround was starting to drive the profits and the revenue and the earnings. And the market hadn't yet, priced it in. And so that was a recent one that was up like 50% in the 3 months that I held it. I ended up exiting it when I felt like it was at, I had gotten enough out of it. So I'm definitely not the type of investor like build a portfolio of 10 stocks and own them for 5 or 10 or 20 years. That's a different type of guy, man or woman. And there are many people successful with that. But my style is a little bit more active than that.
And I think it really suits your personality because you are a very disciplined guy.
Yep.
Where if you put the plan to it, you will execute it regardless of how you feel or how the market is going. But according to your plan, you will execute it. And I think it also boils down to the factors you're looking at, the metrics. I'm sure the FVMR helped or is helping. But are there any other factors you mentioned, like you use a parallel, like looking for a spouse? Like it's not just the looks, but the more characteristic traits, the more factors, the better. So aside from the FVMR, like you mentioned, like you have like 7, like at least 7. So aside from the FVMR, what metrics, factors are you looking at?
So let's say that the metrics or the factors are underneath the categories of FVMR. And so one of the factors that I look at is revenue growth. If the company is generating or accelerating its revenue growth, I like that. And if it's not causing profits to go up that much, sometimes that's even more interesting, because it means that there's some underlying growth, but it hasn't yet come through to the profits. And so maybe the market hasn't looked at it. So revenue growth is one that I like a lot. Another one is asset turnover. How much revenue is this company generating relative to the assets that they have in place? And how does that compare over time and against peers? Those types of questions, those types of measures are what I would call kind of above the line, bigger measures than, everybody's probably looking at net margin or ROE as an example. And so the more we can look at different things, you could look at, and I've tested things like the change in the number of shares outstanding and things like that. So I look at a lot of different factors, but ultimately all of the factors fit under either fundamentals, valuation, momentum, or risk.
Right. At least you know what categories they will fit
Yep.
in terms of that. And you mentioned one of the things that you're looking at is the revenue growth for a company. Like, at least to some people who is not familiar with that metric, what is a good number of a revenue growth? Is it 5%, 10%, 50%, 100%?
Well, it's a good question to ask, for people that are watching this, what do you think? What would you consider to be good revenue growth, maybe average revenue growth? Well, I've tested this over 26,000 companies over 20 years, and I've calculated what was the average revenue growth. In addition, what I calculated was I looked at the stocks that really significantly outperformed, and I tried to understand what was their average revenue growth. And what I found, Neil, was that the average revenue growth was much lower than I thought. This is the publicly listed companies. It was 6%. The average company is growing at about 6% in revenue. And what I found is that if a company can sustain growth at 10 or above, then they'll probably be a very good investment over the long term. So one of the lessons from that research that I did, along with so many other research that I've done over the years, is that you don't have to have a company that's just incredible revenue growth, above average at about 10% or above every year, and sustaining that is very likely to drive performance.
Right. Thank you for giving an insight to it and context, where a conservative 6% is just like the typical company's revenue growth. But at least if you want to make more bang for your buck, at least choose higher revenue growths like 10%.